Well, I guess we're running ahead of schedule a little bit, so I appreciate you sticking around. Thanks for making the time. I know I'm presenting to a hangry mob here. I won't hold you too long. I'm expecting to present for like 15 minutes, not probably using the full 20. I was supposed to present yesterday at around 5 p.m., but I guess they wanted to end on a high note yesterday, so they stuck me in front of it, stopping you from having an early lunch here today. So I named the presentation 2018, Let's Get It Over With. For those of you who've been around here in June, I called it, Black Friday discounts all summer long. It seemed to be that way. It hasn't changed much. I think you can still go bargain hunting out there, and why that is, we're going to shed some light on that as well. We got the companies, like I saw that in the early agendas I've received. Oraninc is often misspelled, mispronounced, and we created a new domain name as well for, just not taking ourselves too serious here, but the company nobodycanpronounce.com, might make things a little easier. We're sticking to the brand name. When I took this over in September 16, I kind of considered changing the brand name, changing the colors, but I'm quite happy with it now because we are the company nobody can pronounce. So, taking the ownership of that. For those of you, I see a couple new faces here as well. I'm just going to give you a quick rundown of who we are and what we do. We are essentially a data mining company. We track all the financings on the TSX Venture and Canadian Stock Exchange. We've logged over 32,500 deals since 2011. Roughly, we had last year 1,350 deals we logged, close to 1.3 million data points actually now. And we do have quite a data-driven approach to things. So I could bombard you today with hours and hours of numbers, but I think I filtered out the most interesting ones for you at this point. We have an in-house data analyst. Joanne sits in Portland, or actually in Vancouver now, and goes manually through press releases because they're not standardized, so there's a bit of manual labor involved. And we do consulting for mining companies as well, just advising them on how to price their financings and to make sure their financings are priced properly or within their peer group. This slide is actually really important. That's why I highlighted it. We don't track all the financings on the TSX and TSX Venture. We do put out an index, and in order to be able to track it all, we decided to focus on companies below a $1.5 billion market cap and financings below $100 million to have an accurate image of what's happening in the market. This is the part that sets us apart from everybody else in the industry. I know there are 2-3 competitors out there doing something similar, but the Oraninc index that was created by Benjamin Cox back in 2011 is really the separation, or our USP. We send out an email every Monday tracking the activity. This is what the index does. It's heavily weighted towards the broker participation, actually, because if the brokers make money, the industry is doing well, and the brokers do see a reason to come back in. So you'll see, and I'll go into that index a little later on as well, but we're just dinging along the bottom here right now. And we use 3 weighted factors, as I mentioned, percentage of broker participation, but also total dollars of financings opened, and the total number of deals opened. One thing we're quite proud of is we had a joint publication together with PDAC. We published that in, I think it was early June. I think it was the day or two after my last presentation here. That's why I didn't get to mention it. And we put out a 39-page document just analyzing the market up until the end of 2017. That's why it was called Still Gaining Momentum. Back in June, we should have said, well, we're losing steam. That's what it should have been. But I think we're coming up with an update fairly soon here as well, just working with PDAC on that. I'm not a technical analyst or anything, but people are wondering what's happening in the market, why are financing so slow. I'm just going to throw some slides here at you. Just the next 4 slides will be, people have said that before. I'm not an analyst or a technical analyst, but just reasons why we are where we are right now. One of the reasons is the U.S. dollar. We're at a very high level right now. U.S. dollar is the safe haven currency right now. Gold used to be that, but the U.S. dollar and the economy is attracting those investment dollars right now. Another point, obviously gold price in relationship to the US dollar is low. There's no interest in the precious metal space at this point, besides the few investors I see here in this room. And I was joking on last Wednesday, or 3 weeks ago, Wednesday, when everybody was traveling to Beaver Creek. Like, why are you putting out press releases? Everybody tried to impress at Beaver Creek at the Precious Metals Conference. I said, everybody's on a plane right now. Nobody will be trading. And because the investment community is so small at this point, I'm being sarcastic, obviously, but there are certain days, or even the day after Labor Day, I think 2017, it felt like we had 1,000 press releases come out with drill results.
Go back one slide, just US dollar.
Oh, for sure. But we were joking, like after Labor Day, we've seen like 1,000 press releases come out last year, but this year it felt like 20. So there's just a massive disconnect, and I think the slides I'm showing you is really just to paint a picture. I'm not the analyst. I'm not going to tell you where the US dollar is going or the gold price is going. That's up for other people to debate. But it's just to paint the picture, to set the tone as well. That's probably the reason why I'm on right now and not yesterday. So, S&P 500, there's no reason for Joe Blow to invest into gold stocks or higher risk stocks right now if the S&P is going up by 10, 15, 20% every year. So again, not telling you where this is going, just to paint a picture. And that's the other reason. The TSX Venture is down. Yes, some of it has been cannabis driven, and the battery metal space has attracted quite a bit of attention. We've seen that also in 2017, where there was a bit of a hype in the lithium space as well, but that's completely died off. And one thing that is actually quite interesting is that I'm pointing out that red circle in the back there. We're seeing actually a massive increase in volume. Back in July, August, we've seen roughly 50 million, 55 million share or volume on the TSX Venture. That's doubled to 110, 120 million of daily volume right now. And just judging by what I'm doing in my own portfolio, I think it's a lot of rebalancing, maybe some early tax loss selling, getting ready probably for Q1 when some interesting financings, or maybe later this fall, are coming available, getting rid of some of the dogs in the portfolio. Because if you look at the share prices of most companies, with a very few exceptions, the share prices remain pretty much flat or actually keep dinging down. So much for that. One slide I've used before. Again, I think most of you are aware of that. We've seen a trend reversal back in 2016 with the number of dollars being raised having massively increased. That sort of continued in 2017, but as you know, we've seen a slowdown in activity towards the end of the year. So let's look at a quarter-to-quarter comparison, so Q1 to Q3 for the last 5 years. We're actually below 2014 numbers. We've only raised so far a little over $2 billion, and that includes common and flow-through, and excludes oil and gas. We do track oil and gas financings as well, but my particular focus is junior mining. So I've taken out the oil and gas financings because they're way bigger in size, and they'd skew up the rest of the numbers. And we're here at a precious metals conference and battery metals conference, so oil and gas is not really of the essence here. Some statistics for 2018. Obviously, the venture exchange is still the most popular exchange. With the dying down of the battery metal space, or slowdown in the battery metal space, we've also seen the numbers of deals on the CSE decrease and slow down. And also the deals on the TSX, where obviously the majors, the bigger companies are listed, activity has dried up as well. Average deal size has come down dramatically as well. I was here in June talking that the deal size has increased, but over the summer we've seen a flurry of smaller financings below $1 million that have actually depressed the average deal size. I was quite positive actually in June. I said, I think in the TSX Venture we were barely above $3 million, which was actually an increase to 2017. Which for me was a good sign that the industry is healthy. We're seeing healthier financings, maybe juicier financings or bigger financings, but that has changed to a lot of companies just doing smaller financings to keep the lights on or tie them over until another financing, maybe later this year or in Q1, where they expect the markets to be better. So that's quite depressing to see. TSX as well, obviously the bigger deals are down dramatically, but for me the key is actually the venture exchange, and that is a good indication of what's happening. One chart, last in June I highlighted the warrant trends. This is the chart I want to focus on here a bit as well. I think the industry is being kept alive by financings in the Canadian space. You can see the increase in number of flow-through financings. They're always attached to a premium, but obviously depending on the province you live in, you can apply a massive discount of up to 50% to your share price, or to the financing price, because you get tax credits. Since we're in the U.S. here, I think the U.S. investors I speak to, they're not too pleased with those flow-through financings because they dilute dramatically. They add the massive dilution to the companies or the share register, and U.S. shareholders have a very hard time where it's almost impossible for them to participate unless they know a charity where they can actually buy the shares back. But I don't want to get into that. That's just getting the ledger removed and all of that stuff. It's, yeah, different topic of conversation. But I think the trend is quite interesting that almost 15% of the financings in 2018 have been flow-through financings, or dollars raised. Number of deals as well, also a good indication. In June, we were pretty much par. I think we had 2 deals less in June, but that has dropped off in comparison to 2015. We had 685 deals as total in the first 9 months of 15. We're way below that now with 636, massively below, obviously, 2016, 2017. And as you know, there are not a lot of financings being offered right now. It's just more the investors chasing exploration results and headline results, not really interested in financings, as when the 4-month hold comes off, the shares are often down before they even get trading. I'm trying to put some numbers on the summer doldrums because everybody talks about them, but here they are. I've compared 2017 to 2018 and just looked at the financings we've logged in our weekly summaries. And one thing that is quite interesting, so we've definitely seen a decrease in deals open and closed, obviously, but the numbers when I put them together were actually quite shocking. They were almost down by 50% in some of the categories. And judging by my Instagram and Facebook feed, all the brokers were on vacation for 8 weeks. It was unbelievable. You can read the numbers yourself. I'm not going to read out the statistics per se, but I think the red numbers in the middle paint a clear picture. And if you want to, I'd be happy to send the presentation to you afterwards as well, so you can you can reference if you want to. 2018 so far, again, you can just see a decrease. We actually started quite active because we had seen a very active December 2017. There were a lot of financings in the first few weeks of December, right before Christmas. Some of them carried over into the new year. That's why we see a very high number of deals that were closed at the beginning of the year, but that number has dropped off. And one thing I'd like to point out also on the right side is the brokered deals. You see often massive gaps between there where we see weeks and weeks of no brokered deals or bought deals actually. So that was primarily over the summer, but and even if you look at the numbers of the scale on the left hand side of the brokered deals chart, it does go higher than 8, right? And that's per week. So this is very rare. The brokers are chasing dollars elsewhere. They're generating fees in other asset classes or in other categories of or in other assets. Yeah. Just a look. I think it paints a clear picture that the top 10 deals, the top 2 are obviously flow-through deals. So Cisco Mining did 69 or close to $70 million in flow-through financings at a decent premium. But I think it paints a picture that 3 out of 10 are flow-through financings, which is actually a higher number even than the 14.5 average I've showed you earlier. And this is just for this summer. The Ornick Index, so people always ask me, glass ball, like Kai, what do you see, crystal ball here? What's happening? Well, if you go back to 2011 as well, this chart only goes back to September 16. But if you look back, there's always seasonality. We always see an increase. So far, it hasn't happened this year. But I'm expecting, talking to companies, there are more financings lined up for later this fall. But also, I'll show you on the next slide, I spoke to quite a few companies at Beaver Creek or here as well. They're hesitant to do anything at this point because the mood isn't, the investors are just not there. And I think this slide says it as well. And companies are being ignorant to a degree as well. I'm not going to say who I spoke to there, but those are actually quotes I gathered from companies. But we have $750,000 in the bank that will last us at least until next year, or easily. I was like, well, you're not generating any shareholder value. What's the point? What are you doing? Oh, no, it's enough for our program. So I think they're being a bit naive, and at the end, they're going to be bullied around by investors again. And I think touching back on what I showed you guys in June, the warrant trend is going to be increasing. So we'll see more deals actually with a full warrant or a half warrant because the investors now can put the screws on those companies. And I think it's a pity because some of those companies have good projects, but they're being ignorant right now and are hesitant to market. Yes, it's dire out there, but if you have a decent company, there is still money around. You'll be able to finance, and there's a good group of investors. I've met quite a few here as well. They're willing to finance and invest. And as I said, other companies, we target financing Q1. We don't want to touch the market right now. We have enough cash to carry out the work while they're sitting on less than $1 million. And actually, the last one is a quote by my broker. He's in no rush to hurry into any financings right now. So he's not interested in taking any at this point. Yes, he's looking, but he's not anxious to pull the trigger on anything. So that's I think a good, what do you call it? A good reflection of the market at this point. A little shameless self-promotion. I'm also running a mining deal club. We've started this last year together with Brent Cook, Tim Oliver, Paul Harris. We're looking at financing opportunities. Excuse me. And one thing we started last October, we've done 6 deals so far, and we haven't done any deals in the last 4 to 5 months. I think that's also a good reflection because we haven't seen financings that interested us at this point. They were either too big, as you've seen the summer financings, or they were just not there. And we wish there'd be more activity. One thing, I wouldn't be standing here without these 4 companies here. They're our sponsors, so if you have time, go visit their website. They have some interesting projects, and I want to thank them for their sponsorship. Yeah, just the websites, orinc.com or the company nobodycanpronounce.com and miningdealclub.com. If you have any further questions, I'd be happy to answer them. We have our database with us. I could throw in numbers at you all day in terms of what's happening in the market, who's raising money, and where the money is flowing, or which commodities are interesting. But I think that's stretching it too much. I don't want to hold you much longer from your lunch. And thanks for your attention. Have a great weekend.